Welcome to this episode of our program, OJ Samuel's Accounting and Reporting. Today we'll be dealing with an aspect of disclosure, which is on revenue. As you know, the standard that deals with revenue is IFRS 15, titled Revenue from Contracts with Customers. With respect to all the provisions of IFRS 15, we are focusing on the disclosure required of revenue. So the question in this episode is, how detailed is your revenue disclosure? How detailed is your revenue disclosure? Apart from presenting revenue as an item of statement of profit or loss, as a line item, we present revenue, we consider cost of sales or direct operation cost, and we proceed along the way. Apart from presenting revenue as that line item, certain disclosure or certain contents, rather, of disclosure is required about that line item revenue. So IFRS 15 gives specific requirements as to the component of the disclosure that are required to be seen with respect to revenue line item presented in a set of financial statements. So that is what we'll be dealing with in this episode, and we'll be looking straight in the words of the standard. So we'll go to paragraph 114 of IFRS 15. Paragraph 114 of IFRS 15, and I read, it is on disaggregation of revenue. An entity shall disaggregate revenue recognized from contracts with customers into categories that depict how the nature, amount, timing, and uncertainty of revenue and cash flows are affected by economic factors. An entity shall apply the guardians in paragraphs B87 to B89 when selecting the categories to use to disaggregate revenue. Paragraph 115. In addition, an entity shall disclose sufficient information to enable users of financial statements to understand the relationship between the disclosure of disaggregated revenue in accordance with paragraph 114 and revenue information that is disclosed for each reportable segment if the entity applies IFRS 8 operating segments. Now, these paragraphs make give a description of the nature of the amount, of the timeliness or timing, and of the uncertainty surrounding revenue and cash flows flowing from a revenue line item that should be disclosed. And these paragraphs make particular references to certain paragraphs in Appendix B that will guide. So let's just quickly hop over to paragraph B, part of paragraph B87 to B89, not trying to read all of the content. So we look at paragraph B87 in parts. The extent to which an entity's revenue is disaggregated for the purposes of this disclosure depends on the facts and circumstances that pertain to the entity's contracts with customers. Some entities may need to use more than one type of category to meet the objective in paragraph 114. Paragraph 114 is the paragraph we read before coming to this paragraph. I repeat, some entities may need to use more than one type of category to meet the objective in paragraph 114 for disaggregating revenue. Other entities may meet the objective by using only one type of category to disaggregate revenue. Now, taking it in part, when a line item revenue is presented, disaggregation is required. And this disaggregation considers a lot of factors. What are the products sold by the entity? What are the categories of services offered by the entity from which or upon which the revenue were made or have been made? What are the product types? Product A, product B, product C, D, E, and that other, and what corresponding revenue has been made from each product type. So is there enough to present the line item as just revenue? And in the note, as we often see, the notes are often a repetition of the presentation of that line item. So if revenue is like note 4, in the statement of profit or loss, revenue note 4, 2 million. Sometimes when you go to the note 4, what you still see is revenue 2 million. That is not a disclosure. It doesn't speak to the details required as to the component of disclosure expected on revenue. Therefore, an entity will need to disaggregate, break that revenue down into the sub-components to disaggregate in order to review certain characteristics that enable a reader of financial statement to understand the nature of revenue, the amount flowing from each nature, the uncertainty in revenue, the cash flow associated with each revenue subtype or subcategorization, and the rest. Specifically, paragraph B89, gives an idea of the various form of disaggregation or sub-componentization, if that is maybe used, of a revenue line item that can be used while doing the disclosure. It states, examples of categories, that is paragraph B89 of IFRS 15, which is the standard on revenue from contracts with customers. So we're reading paragraph B89. It states, examples of categories that might be appropriate include, but are not limited to all of the following. A, type of good or service, for example, major product lines. Do you have things on beverages? Do you have things on drinks? Do you have things on industrial products? Do you have revenue flowing from consumer products? Those are disaggregation, right, based on product types. So if the revenue is 2 million, for example, from your consumables, from industrial products, what are the various subcomponents that make up that 2 million? So when the line item revenue is stated, a note breaking up that revenue into the various product types or the various service types that total up or that add up to that revenue should be disclosed. Number B in paragraph 89, geographical region, for example, country or region. For a business that exists in a jurisdiction, the revenue might have been made not from just that location of the business. Revenue might have been made from the southern part of the country, from the northern part of the country, that is the reporting jurisdiction, from the eastern part, from the western part, from the southwestern, southeastern, northeastern, whatsoever the regionalization commonly associated with that jurisdiction is known. Therefore, revenue made from these various regions should be disclosed according to the revenue made from those regions. So the revenue in the example we're using is 2 million. So we break down southwest, 500,000, for example. Southeast, 200,000. Northwest, 300,000. In that order. That is geographical disclosure of revenue line item contained in a financial statement. So apart from the product types, we may look at also the geographical reporting of the sub-region or regions of revenue. It is also possible that apart from the revenue made from a country may really be an international business. So there are foreign customers, there are non-resident customers. So overseas sales, domestic sales could be a categorization, or continental classification, Africa, Middle East, North America, South America, Europe, Asia, right? Australasia, depending on international geographical classification that may want to be used. So there's another aspect of disclosure that may be made on the subcomponent or on the disaggregation of revenue. So the paragraph B89 mentions market or type of customer. This is when you do, maybe based on your market segmentation. You want to disclose the revenue according to the aspect or set of the market that, from which the revenue was made. Maybe education, maybe defense, right? Maybe education, defense, the aged or retiree, whichever segment of the market, the demographic that translates into the total of that revenue. So that may be appropriate. So an entity may need to take that into cognizance. The fourth item is the type of contract. For example, from which type of contract? This will be common often most time for long-term contracts. Revenue made from construction, long-term construction contracts. For example, order description. Number 5 is the contract duration. For example, are that short-term contract, are that long-term contract, what are or what were the revenue from the short-term contract, from long-term contract, that nature, it may go in that form. All of these considerations are disaggregation of revenue to create fuller information to give rise to the context, the details that total up to the revenue line item presented in a statement of profit or loss, or in the profit or loss section of the statement of comprehensive income. Another is sales channels. For example, goods sold directly to consumers and goods sold through intermediaries. For example, for an FMCG that operates both an online and offline store, that FMCG could sell directly to consumers. So no middlemen in the sales chain or in the value chain. The same FMCG may operate through authorized or licensed distributors of its products. These are intermediate, these are wholesalers that may sell to retailers, or that it may even sell, in some cases, directly to the final consumers. So two channels. Direct sales from the FMCG, that is fast-moving consumer goods company, to the consumer, or sales through wholesalers or intermediaries, authorized distributors, licensed operators who work in conjunction with that company. So you may want to report revenue breakdown or disaggregation in that form. Whichever way that is appropriate. For a mono-product company or for a mono-service company, of course, we will not expect a product line differentiation because the such entity is a mono-product company or a mono-service company. For a single locale or a specific location entity, we will not require or expect a geographical disclosure concerning revenue. The important thing is to do an evaluation of the nature of the disaggregation that is necessary to achieve the disaggregated reporting of revenue in line with IFRS 15. And also, we are going to take a paragraph in paragraph B88. How does an entity ordinarily present its revenue information? Apart from the typical general purpose IFRS financial statement, how does an entity present its revenue information? Right? So when it issues investors and publication, for example, earnings releases, and other financial highlights contained in annual report, that approach or those outlays or those sort of percentage of revenue in all of these, the earnings release, the investor relation publication, for example, the financial highlights in any other of the annual report, all of those revenue, right? All of those revenue should be followed, should be tracked when disclosure or when disaggregation revenue is done. They have to match up. They have to match up. And another thing presented, which we read earlier on, maybe let me hop back to quickly read it. In that paragraph 115, it says, an entity shall disclose sufficient information to enable users of financial statement to understand the relationship between the disclosure of disaggregated revenue and revenue information that is disclosed for each reportable segment if the entity applies IFRS 8 operating segment. There are what we call operating segments. These are components of an entity. These are components of an entity that meet certain criteria. Quantitatively, there is a 10% threshold. An operating segment is not a department, and it's not automatically a directorate or a division. So there are qualitative criteria, meaning when an organization is organized, when a segment is organized in such a way that it presents certain structured information to the chief operating decision maker in an entity concerning the allocation of resources to that unit and the generation of return or sales or income or inflow from that unit. That kind of breakdown, that qualitative attribute is part of the contribution made in identifying a component as an operating segment. Quantitatively, there's a 10% threshold. When you combine the operating profit made by other segments, an entity that makes 10% or more qualifies as an operating segment. Or when you sum up the operating losses, the reported losses by all these segments, a segment that makes 10% or more of those operating losses qualify as an operating segment. So that is just an example of the quantitative threshold. Whatever that may be, under IFRS set operating segments, an entity is required to do what is called entity-wide disclosure. There are some disclosure expected that are required to be made concerning an entity's operating segments. And those information border on the sales made to various regions that operating segment intersect with or deal with or covers. Geographical information of sales made within an operating segment for all of the operating segments are required under IFRS 8. Also, product type. The product types or the product offering or product lines by all of the operating segments need the revenue information concerning those product type or product line to be disclosed in line with IFRS 8. Thirdly, IFRS 8 operating segment also require that an entity discloses, right, its major customers, not necessarily the name, no, but a description, a grouping of a major customers and revenue made from each category of major customer by all of the operating segments. So three sort of broad information. Products, sales kind of information for all of the operating segments. The geographical information for all of the operating segments. And then the significance of a customer or buyer based on the revenue made from that buyer or those buyers from all of the operating segments. These are disclosure required under IFRS 8. Therefore, what this paragraph is referring to is, as an entity discloses the disaggregation required under IFRS 15 concerning a revenue. So that breakdown of revenue into product type, the region, market segment, for example, sales channels. This breakdown required under IFRS 15, there should be a way that the way the disclosure is made, that they total up or they are reconcilable to operating segment revenue information required under IFRS 8 for those entities that have operating segments. Two sets of information. There are operating segment revenue disclosure required under IFRS 8 operating segments. There are revenue disaggregation items required under IFRS 15. So IFRS 15 requires that the breakdown or the composite information contained under IFRS 15 revenue disaggregation under any of the lines, product, region, sales channel, customer type, whatsoever, duration of contract, timing of sales, and all of that. That breakdown, that composition should be reconcilable with the large-scale disclosure required from all operating segments concerning their revenue disclosure along product line, geographical location of customers, and also the significance of revenue made from each customer. So they should be reconcilable. Therefore, as we present revenue information or financial, it is not enough to say revenue 20 million or 10 million. In the note, we don't write revenue 10 million. Nothing has been said. No disclosure has been made. That means nothing, sadly. That preparer has only done a presentation in the face of the financial. But the disclosure is zero. Because the disclosure, as required by paragraph 114 of IFRS 15, is there must be a disaggregation, a breakdown. The sources of the revenue, product type, geographical area, customer type, sales channel, tenure of the contract or nature of the contract, whatsoever. And that entity is such that it has operating segment for which key revenue information is required. The revenue disaggregation information disclosed under IFRS 15 should be reconcilable or should match. There should be seamlessness or sameness in amount as they total up from the revenue disaggregation information under IFRS 15, and then the IFRS 17 operating segment revenue disclosure for all of the segments contained for those entities that have operating segments. So this is key. There are other areas of IFRS 15 which we've not covered, like disclosure on contract assets, disclosure on contract liabilities, disclosure on revenue, disclosure on what are performance obligation, disclosure on how transaction price match with performance obligation, disclosure of other items. But the essence of this episode is to emphasize the disclosure required on revenue, apart from presenting it in the face of the financial, but as an annexure, as a note to the financial, that revenue should be disaggregated into all of these that we said. And this should be done in such a way in the context of the entity reporting. Is it a mono product? Is it a multiple product? Is it a single location? Is it a national, regional, continental, global business? Whichever way, whichever route or tributary of revenue, so to speak, all of these should be disclosed. So that is the takeaway from this episode of our program from OJ Samuel's Accounting and Reporting. My name is OJ Samuel once again. We thank you for being with us. Please watch our video, like them, share them, subscribe to our channel, share them widely among your professional network as we continue on our mission to deepen the quality of financial and corporate reporting from all of the international framework applicable for corporate organizations in Nigeria, in Africa, and around the world. Thank you, and see you again in the next edition. Bye for now.